Today I have such an exciting video for a number of reasons. As we already know, AI is hands down the hottest industry this year. And Nvidia is up about 20% since I made this video just a few weeks ago where I talked about catalysts that were about to drive the stock to new all-time highs. But the important question now is, can Nvidia skyrocket from here? There is still a major catalyst coming that can propel the stock to a new all-time high. One of Wall Street's most famous investors and also one of Wall Street's most hated investors are now loading up on Nvidia's stock. So can the Nvidia rally continue and make even more millionaires? Stick around to discover how you can make the most of this pivotal moment in Nvidia's history. Now, before we get into it, I just want to say thanks to everyone who has watched my recent videos and subscribed to the channel. We just broke above 30,000 subscribers in the past few hours and already heading towards 31,000, which is amazing. Thank you so much to everyone watching these videos. I appreciate every last one of you. It's even more amazing that only 11% of you watching these videos are actually subscribed to the channel. My target at the start of this year was to reach 40,000 subscribers. So if you are one of those 89% that is still not subscribed, then consider joining the channel. Now we've got a lot to get through in this video, so I will try to keep the intro short. As usual, if you find any value, can I ask you to smash the like button? It costs you nothing, but it helps the channel out so much. I'm aiming to get 600 likes on this video. Help me hit that goal. I'm not a financial advisor. This is not financial advice, so always do your own due diligence and try to answer the question later in this video. But for now, let's get straight into it. So just a word about Nvidia. Nvidia ranks among the world's leading microchip manufacturers and is best known for its contributions in the field of graphics, gaming, and AI. Its chips and related software power the fastest, highest resolution graphics, but along with gaming, Nvidia microchips are used in visualization, data centers, EVs, and of course AI. Now, although Nvidia has become a household name to most over the past few years thanks to its insane growth, this is actually a mature company. Nvidia was founded in '93. The company was intended to focus on chips for the gaming and entertainment industry. But today, Nvidia's business has evolved from the core gaming business with its GPUs into the world's biggest artificial intelligence company. It is these developments in AI that has fueled its success and seen Nvidia become the largest company in the world in 2024. So Nvidia just released their earnings on Friday, November 22, which once again seen the company triple beat expectations. So looking at the latest investors presentation, Nvidia goes into a lot of detail about where the company is headed and about the biggest technological opportunity the world has ever seen, which I will come back to. But first I want to look at how Nvidia is growing and their projected growth, because this is what will ultimately drive the share price. Looking at this chart, we can see the huge revenue increase that Nvidia is achieving each year. In just 4 years, the company has increased revenue from 10 billion in 2020 up to a projected 60 billion for this year. But Nvidia are projecting to increase this to 91 billion for full year 2025. But what is even more interesting than this is when we see exactly how and where they make their money from. On the right here, we can see that Nvidia's margins are crazy high, with the company now achieving operating margins of over 67%. And as we would expect from such a huge increase in both revenue and margins, their free cash flow has exploded, with Nvidia expected FCF of over $45 billion next year. But having all this cash flow does allow Nvidia to do things that not all high growth companies can do. One, they are utilizing cash to repurchase shares. This is something that tends to be done when a company's management feel that a stock price is cheap and it's going to rise, which is incredible when you consider that Nvidia is at all-time highs. And two, they are using their strong financial position to increase dividends and make strategic investments. Now, all of these things are very good for shareholders and increase stock value. But as I said a moment ago, it's the breakdown of Nvidia's revenue growth that I find very interesting. Now, Nvidia was a name that was familiar to anybody in the gaming industry for the past decade, maybe even 2 decades. And gaming was once the pillar of Nvidia's revenue growth. Back in 2020, gaming accounted for over half of their revenue, and by 2022, this had gone up to $12.4 billion from $5.5 billion 2 years previous, and still accounted for almost half of the company's overall revenue. While Nvidia have had decent growth from automotive, where the company has deals in place with the majority of top automotive companies, And the professional visualization arm of the business has seen decent growth too. But interestingly, as recently as 2022, visualization and gaming accounted for as much as 60% of the company's total revenue. However, as of this year, that now accounts for less than 10%. It is the companies driving the data center market through the leading accelerated computing platform that has grown more than 25x in the past 5 years. Accounting for less than $3 billion in 2020, full year 2025 estimate revenue will be closer to $80 billion for the data center segment of this business. Nvidia leads the way in AI and HPC, used by all hyperscalers, major cloud computing providers, and over 40,000 companies. They power over 75% of the top 500 supercomputers. Nvidia's dominance in this market should not be underestimated. Nvidia has accelerated software and compute by a 1 millionx in the last decade, far surpassing Moore's law. Accelerated computing is needed to tackle the most impactful opportunities of our lifetime, like AI, climate simulation, drug discovery, ray tracing, and robotics. And we can see the growth in Nvidia's accelerated computing ecosystem here over the past 3 years. And of course, generative AI, possibly the most important computing platform of our generation. Now, accelerated computing enables full-scale optimization from algorithm to GPU architecture. And we can see here the incredible efficiency improvements over the past 10 years. Nvidia's Blackwell is just beginning now, and when we look here, the energy efficiency between Blackwell and predecessor Hopper does not look like very much. But putting these side by side shows us what an incredible difference there is between them, and why Blackwell is in such demand and completely sold out a year in advance. Now, something that is not in this presentation, because it is not entirely relevant to Nvidia, but I think is very interesting here, is something that I talked about yesterday in my Palantir analysis, and that is the Rule of 40. In Palantir's recent earnings report, they disclosed a score of 68. The Rule of 40 is simply a ratio that measures a company's combined growth rate and profit margin. Many venture capital and growth equity investors believe this ratio should exceed 40%, especially for software companies. So while Palantir did amazingly with a score of 68, which is amazing by the way, if we calculate the same for Nvidia, it would be closer to 170 according to Finbox. And considering Nvidia's huge revenue growth and their improving margins every quarter, Nvidia's share price looks very much justified. Nvidia sees continued AI momentum. Is this a golden opportunity to buy the stock? As we've just seen, Nvidia has once again produced outstanding revenue growth, and the stock's valuation remains attractive despite its huge run-up. Now guys, let's not forget, we are talking about a company that is the highest valued company in the world, and we are saying that it is still attractively priced. That is incredible. But before we look at this, I want to talk very quickly about one other thing. Does billionaire Ken Griffin know something that Wall Street doesn't? So about 3 months ago, I spoke about how Citadel had dumped a large percentage of its Nvidia stock and had piled into Palantir. Now, in that time, Palantir stock has ran up about 100%. Now, Citadel's portfolio does include thousands of stocks, but Nvidia has now become its second largest individual stock holding. And like him or hate him, Ken Griffin is known for pouncing when an opportunity presents itself. Nvidia's market value is set to rise. I say that one catalyst right around the corner will help Nvidia to do something that no other company has ever done, and that's to make it to a $4 trillion market capitalization. The company's launch of the new Blackwell architecture and the best performing chip ever. Nvidia already has sent out 13,000 Blackwell GPU samples to customers, including Microsoft and Oracle, who recently posted on social media showing their Blackwell-powered racks. So Nvidia aims to ramp up production in the current quarter and even bring in billions of dollars in revenue from Blackwell during this period. On top of this, Nvidia has spoken of the insane demand for Blackwell, with demand exceeding supply. This should drive growth for the company and please investors, so it could progressively push the stock higher. To get to a $4 trillion market cap, Nvidia shares would have to rise about 13%, going up to $165. That's a clear possibility considering the company's valuation today and their growth prospects. Trading at 50 times forward earnings estimates, Nvidia isn't cheap, but it is reasonably priced for a high growth player. I have mentioned Palantir a couple of times in this video already. So consider that Palantir's PE ratio is over 300. Suddenly, we have Nvidia's PE of 55, which does not seem so bad, and analysts expect annual EPS growth of 35% over the coming 5 years. So it's actually hard to call Nvidia expensive. But guys, what do you think? Is Nvidia still a solid investment now near the end of 2024, with the stock pretty much at its all-time high? Or do you think that we should expect a pullback before the end of the year? Let me know your thoughts in the comments below. There is a lot of talk on social media right now about Nvidia, especially after their earnings report last week, but always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe. But before you click away from this video, don't miss out on the Black Friday sale over at Seeking Alpha, where there is up to $289 off using my referral link. Get $90 straight away off premium, but there is also a free 7-day trial. So do yourself justice, take the trial, check out some articles, and learn something that you don't already know. Trust me, your portfolio will thank you. If you don't like it, then cancel it within the 7 days at no cost. It really is that easy. They have articles on every stock. Like for example, just look at this. Back when Palantir was at rock bottom at the beginning of last year, trading at only $6, there was all these articles screaming that Palantir is a buy. The stock is up more than 900% since these articles. That's 900%, guys. So click on the link below and check out the free trial. Even if you don't like it, cancel it, but make use of the free trial.